Good morning, fellow Easy Properties investors, and welcome to this Easy Properties webinar. My name is Carl, and I work in the brand team with Easy Properties, and I'm going to be hosting you guys today, and it's my great pleasure to do so. Our Easy Properties CEO, Rupert, wanted to host this, but I decided that we're going to get people that are far smarter and better looking than Rupert and myself to join me. So we've got two special guests. There are 55,000 of us investing on Easy Properties. We've invested in over 15 properties. We own around 200 units. The value of our investments is about 250 million Rand. And we've done all of this in a short space of time. And the purpose of today's session, and we're going to keep it to about 30 minutes or so, and it'll be available on YouTube afterwards, really is to get very clever people, as I said, and very good-looking people to help us better understand some of the tools we've got on the platform to help us maximize our investments. So no pressure, Lynn, Maureen, and Rob. We're expecting great things from you. But before we get started, maybe Maureen, you can just tell us a little bit how long you've been with Team Easy. You're one of our finance gurus, but yeah, how long have you been with us, and what do you like most about Easy and Easy Properties?
Hi everyone, my name is Maureen Chikovi. I am a chartered accountant and I joined Easy Properties last year, June, and it's been quite exciting. The team is amazing. So that's one of the things I really loved about joining this company.
I think Rupert probably paid you to say that, but it's certainly been great having you with us and doing all the work. And we're also joined by Rob. Rob is our Vice President of Finance, so he's the main guy in our finance team. So yeah, Rob, how long have you been with us, and what are you loving about Easy Properties and Easy Equities?
Oh, thanks, Carl. So I'm also quite a newbie. I joined in January of 2021, so I've been with the group for just over a year. And yeah, just love what we're doing, love the innovation, love the fractional ownership components, and yeah, that you can literally for R5 invest in property. So yeah, it's actually a business I've always wanted to get involved in, and so glad that it's being done at Easy. So yeah, it's awesome.
Great. Well, thanks, Maureen and Rob, for joining us. And if you want to hear more about Rob, he's also part of our Easy Crypto Conference, which is happening on Saturday, and all the deets for that's on our social media as well. But without any further ado, I'm going to share my screen and see if this works. And hopefully it does. And we're going to talk through just around some of the tools, as I said, that we've got on the site to help us make better investments. And I'm going to ask Maureen and Rob the questions. So this is something that I didn't know properly. But if you're on your main Easy Properties dashboard and you click on Browse Properties, you get all our properties, the new listings and the auctions. And I'm just going to pick at random one of my favorite properties. So 7 on Middle. And this gives us the information here of how successful we were when we originally listed it. But if you click on View Property, it gives you all the information on the property, and it was really useful for me to go back and look at this and understand all of it. And if you scroll right to the bottom of the page, this is what we're going to talk about: quarterly reports. So I'm going to open the one for 7 on Middle. And there's a report for each one of our properties. And I would encourage you as an investor to check them out. They're short and sweet. It's basically a one-pager, some infographics, really short, but it tells you about the performance of the property that we're invested in. And as active investors, you're welcome to ask any questions. And if you want more information, let us know, particularly in this session, because Maureen is the person who does all the hard work in putting these together. So we get a little bit of a summary about what's happened in the property. This is a particularly exciting one for me because our rentals are guaranteed until August 2023, next year. So those of us that are invested in this property have got guaranteed income until well into next year, which is very, very exciting. And so if you scroll down a bit more, you'll see therefore that our occupancy is 100%. So all the units that we together own in 7 on Middle is occupied. We've collected all our rent. There's nothing that's outstanding, and there are no arrears because it's guaranteed by the developer. So this is a really good investment from my perspective. But now I want to ask Maureen some of the things that I don't understand that well. And maybe Maureen, you and Rob can chat us through, but let's, you guys can decide who does it. Chat us through these three things that we say here: the dividend declared, the EBITDA, which clever accountants think people like me must know what it is, and we don't have a clue, and the NAV per share, which I also don't get. So maybe you guys can talk to us a little bit about those three things, please.
Sure. So in terms of the report, so every quarter we declare a dividend. So if you scroll down, you will see, I don't know if you're going to scroll down, Carol. So in Q4, the dividend that was declared in this period was the 79,000, right? So what we did there, we said the 79,000 divided by the total number of shares. So that gives you how much you're getting back as a dividend per share. So when you, that 1.3 cents is basically what you're getting back for your R1 share that you purchased, right? And then if you scroll up again, Carol.
So Marina, I just want to pause there a little bit. And I think it's important that people remember that we pay these dividends every quarter. And obviously the more shares you have, the more your dividend amount would be. And so whilst 1.3 cents might not seem a lot, if you look at it percentage-wise, and that we get this every quarter, then the picture actually changes quite radically, and it's a very rosy picture. Would you agree with that?
I agree, yeah. So I think something that people need to keep in mind is that one share is R1. So we can't declare a dividend in rands. We can only declare it in cents, because if we were to declare it in rands, that means you're getting back 100% of your investment and more, which is unrealistic. So yeah, exactly. So it is a good performance.
Good. So you wanted me to scroll up?
Yes. And then the EBITDA per share. So what EBITDA stands for is your earnings before interest, tax, depreciation, and amortization. So basically that's earnings from your day-to-day operations, excluding like non-cash items. So what we did there, we said the total EBITDA for the period divided by the total number of shares, it gives you your EBITDA per share.
So basically, this is all the money that we make as investors before you and the tax man and other legal people take my money away.
Correct.
Okay, cool. So fine. And then
yeah,
so
just to add to that, Carl, EBITDA, the reason we have it in there is it's, you know, a lot of companies use that as a metric and they report on it instead of the earnings per share, just because it's more closely linked to cash. So you can see EBITDA as more of a cash flow item on the income statement. Like Maureen pointed out, in this instance, you can see there in Q3 of 2021, we had a fair value adjustment of R1 million, which is obviously not a cash flow item. And what that fair value adjustment is, we revalue the properties on an annual basis. So in this instance, the 7 on middle property had an increase in its book value to, well, by R1 million. And that is an accounting adjustment so that the asset on the balance sheet reflects its fair value and what we could expect to sell that property for. So we've excluded that from the EBITDA. It's below the line, underneath the EBITDA line. And it does filter through to the net profit that the SPV made. But if we were to, you know, report on an earnings per share, it would just look like you made a lot of money.
I was going to stop you there because there's some really good... I just don't want you to carry on too much.
Sorry.
Too much information for all of us, and there's some really cool stuff there. So and most of it I think we get. And I'm hugely impressed by the fellow investors that have joined me, because part of being an investor on EasyProperties is having the experience of owning property and understanding and learning. But I just want us to go a little bit slowly, because we talk about SPVs and all kinds of things that make sense to you and Roop and Maureen and not necessarily to me. But the one thing I want to pick up on is that fair value adjustment. You mentioned that it's based on an annual valuation that we do on these properties. And that's important because those valuation reports are also available in the same place that I access this report. And you've already indicated that there's been capital growth in this asset. And I think it's worth reminding all of us as investors in EasyProperties, part of how we make money is that hopefully our portfolio gains in capital over the 3 to 5 year period we hold it. And here we can see that this has happened. And in addition, we get paid the quarterly dividends that Maureen and you are talking about. So I think it was a really good point, and I just wanted to highlight that. So thank you. Cool. So now we're going to go back, Maureen, and now that we understand the first two, the dividend declare and the Ebitda per share, what is the NAV per share, Maureen and Rob?
Okay, I'll take that one. So the NAV per share stands for net asset value. So that's also an accounting metric. So in accounting, a business is generally, if you were to, take your assets, everything you own, and you pay all of your liabilities, everything that's left over would be the equity that's in a business. And net asset value and equity is basically the same thing. So in this instance, for the R1 shares, if we were to sell the property and pay out all the cash that's in the bank account, settle all the debts, we'd basically get R1.15 back. That is what would be realized, and if we were to liquidate the business into cash. So it's a nice metric to have on here, because we know that we paid R1 for the shares, and basically it's now worth R1.15, so to speak. So there's a 15% return, you can say, that's been made. Obviously, that is just indicative. It's not a final number until we do sell the property in 5 years. But the reason that is the case is, again, because of the fair value adjustment on the property. So the assets in the business have increased, the fair value's gone up, and that net asset value per share is kind of giving you an indication of how much capital appreciation you've had on your shares.
Great. So to summarize that, because that makes sense to me and I really like that, when we look at these property reports, the NAV per share is a good indicator, simplistically, if it's above the 100 cents, which is the amount that I paid. If I bought one full share at R1, then anything above this is my potential profit once we sell these properties. So it would be good in the next quarter, if this is even higher, then that would be a positive indicator. And if it was lower, does that mean I need to sell this property in the auction and panic? What would be the point if it's lower?
Not necessarily, because remember, we're only revaluing the properties once a year. So that net asset value you'll only really see, the adjustment from the fair value adjustment on an annual basis. And it will fluctuate slightly quarter to quarter, depending on, how much of a dividend we paid and how much cash is in the bank accounts and that kind of thing. So it's not to have, a massive amount of emphasis on a quarter to quarter basis because of the accounting entries. But certainly on an annual basis, once we've done, the revaluations, it's a nice metric to keep in mind. And of course, you look at that in conjunction with your, the dividends per share to calculate your estimated return to date. You can use that in conjunction with the dividend per share.
Cool. Maureen, there's a 1.3 cent dividend here, and we say that we declare the dividends every quarter, so every 3 months. Do we guarantee, and will there always be a dividend that's paid on every single property, or will this dividend sometimes be 0 cents? And if so, why?
So in one of our properties, we had a situation where we didn't have a dividend in the previous quarter, mainly because the property wouldn't have earned any rental income as we were waiting for the transfer of ownership to come to the property. So there is a possibility where, or there are situations where you would get a scenario where the dividend declared is nil, but mainly, or most of the time, it'll be the case of we haven't earned any rental income yet, and we're still awaiting the property to transfer into the SPV's ownership. So yeah.
Thank you very much. And just as a reminder to all our users, if you go onto the onto the EasyProperties site, and I'm just going to log back on into this demo here. But if you go into the EasyProperties site and you go under Dividend Calendar, as a reminder, it tells you a lot about dividends. It tells you all the historical dividends that were paid. So you can see what was paid from the word go per property. And Maureen and the team updated the dividends that were paid. And so that's the one we're looking at now, 7 on middle, which is the 1.3 cents. And so it's interesting here to look at the different dividends that are paid. The last dividend that was paid on 7 on middle was 1.15. So that is slightly increased, but it's really useful to look at the dividend calendar as well in terms of performance and what we can expect as investors. So I'm going to go back to the 7 on middle one. And I want to ask Maureen around the rental income specifically. So as a reminder, go to the bottom, all the documents are here, the valuations that were done. And they're really interesting, guys. And I love reading these, partly because I understand very little of them. So it's a good learning experience. They're great FAQs as well. So Maureen, on your report here, rental income. So this has grown, and we can compare it with the 2 quarters that we've owned this property. And this quarter is more. So I think you talk about the fact that the previous quarter, we didn't own the property for the full quarter. So that's maybe why rental would be down. But what would some other reasons be that rental income goes down? I mean, or would this always be increasing?
So it won't always be increasing. So I agree with what you said. So in this case for 7 on middle, in Q3, the property only registered mid the quarter. Therefore, we weren't able to earn the full rental income for a full quarter. Whereas in Q4, that is the full rental that we are expecting to see going forward up until the end of the rental guarantee. Whereas after that, there could be fluctuations in terms of that rental income due to maybe we don't have full occupancy and not all our units are tenanted. So it is possible for that number to fluctuate, especially after the rental guarantee.
Great, thanks. And it could, of course, also go up if we increase rentals or for other reasons as well. But I think it's good the way you explain it. That's sort of a good indicator for us on this property, at least until August 2023, that this is the type of income that we'll be looking towards. Other income would be things like interest and things like that. Is that right?
That's correct. So in Q3, you can see the interest there was quite high, mainly because that came from the interest that we earned on the deposit we made for the property. So before the property transfers, that money is earning interest. Therefore, that's why it's so high in Q3. Whereas in Q4, it's just interest that we're earning from the bank. So, yeah.
Great. So that makes sense. So as we owned it for the full quarter now, we'd have more rental income, but less